Good day, Jay. What's your view to the markets?
Die Stummschaltung ist aufgehoben.
Good morning, traders and investors. I hope you're doing all really well. Good morning to you, Jens. Disclaimer is in full effect. Let me show you the screen and we are off to the races. Can you hear me okay? Everything okay? Pete, Chris, Lars, are we good to go? Dees? Okay, good. Hi, Bob. Good morning to you. All right, rock and roll. Let's go. Our trade from last week, Tuesday. Hope you all realized that that was a almost no-brainer because it went a little bit beyond target. My traders know how to read this. We couldn't even reach bottom edge, which is inherent strength, but at the role reversal, we saw some weakness. So easy peasy, we made some money. Headlines this morning. Risk picture is mixed overnight. We had some Asian equities that were green, but China, the People's Bank of China refrained from a liquidity stimulus in the amount of 120 billion. They stood pat. They're going to go via short-term financing. The renminbi was fixed a little bit tighter, so good to go. Nevertheless, on the wire, Chancellor Hammond, this morning, Monday morning, we have UK budget, and Hammond says he sees a need for new tax and spending plans and prolonged austerity, and the Bank of England would have to do something about rates in case of a, you guessed it, no deal Brexit. So that's still what's really hitting the pound and the euro is that whole Brexit, no Brexit ordeal, and that's gonna follow us for a few more weeks. And I included a slide by ING in this morning's morning meeting for us so that we have a timetable visibly in front of us. Also of importance, S&P affirmed Italy a triple B flat, but outlook cut to negative, versus Germany affirmed at AAA, outlook stable. And now I'm realizing that I did not update one slide. So while I'm going through this, I'm going to get the slide up and running. Brazil, far-right leader Bolsonaro, the Trump of the tropics, as his nickname is in the market, won the presidential election as expected. ETF with exposure for Brazil rallied on the back of it. Hang on one second. I'm honestly trying to find the slide for us all. 1 second, guys. Low chart layout. Italy, German spread. Here we go. Here we go. Here we go. And it is at 2938. Okay. Sorry. Month end dollar positive. Please be aware. It's month end this week. It's month end this week. It's month end this week. So we have the funds, global funds adding dollar. We have Soma Day on Wednesday, i.e. that is the account where the Fed is able to induce liquidity or withdraw liquidity out of the capital markets. Wednesday, we have the reinvestment day for funds that are coming and hitting the Fed's books. So very, very bullish. 90% of past Soma days saw the euro dollar weaken. And we have the tax reform for corporations finally hitting the market. That means T-2 today until Wednesday, repatriation of the US dollar is going through the market. So that means you do not want to short the US dollar until Wednesday. Find something else to short, be on the safe side, put the odds in your favor. To go against this means you do it at your own hazard to your own health/wealth. Okay, dollar, Italy 10-year, Germany 10-year, this is wrong. We are at 2.943, 2.943. The high is correct. We were at 3.38. So I forgot to update that. Excuse me, guys. Strength versus weakness. We're seeing the New Zealand dollar technically strengthening. Technically, nothing on the docket for this week really in terms of economic news. Nevertheless, the Commitment of Traders report showed us a long signal and we're seeing that firing away. Happy days. Risk events live. I think we can skip that in the interest of time because I prepared quite a few slides for us that will focus your attention on what's really important in terms of economic events this week. Okay? So for the pound, today we have the UK budget. That's important because it will then actually tell us if there's an increase or a decrease in terms of refinancing need of the sovereign's debt. So if there's an increase in debt, that means rates will rise, that means pound strength. If there were a decrease in funding needs for the UK government, that would mean a decrease in rates and pound weakness. Easy peasy. Super Thursday is on Thursday, i.e. Bank of England is expected with a vote of 0.00 to leave the rates unchanged at 0.75%. We wouldn't have Brexit, that whole theatrical thing, then you would expect up to 2 more members in favor of a hike right now. We also have the inflation report out of the Bank of England and the monetary policy summary. That's why we're giving it the name Super Thursday, because only once each quarter we have all 3 reports in one day. So the 2 guys that I'm thinking of are Haldane and Saunders. They could vote for higher rates. Why? GDP growth on a quarterly basis came in at 0.7% in August, and the Bank of England has sort of a speed limit at 0.4%. So these aggressive hawks could actually vote for higher rates. If it comes out 7.02, that would mean pound strength. So be aware of that, please. Pay growth hit 3%. Why? Due to tightness in the labor market. So we're seeing average weekly earnings increasing here. We're seeing GDP growth rate potentially coming in higher. In focus, Brexit, obviously, deal or no deal. Is the GDP growth sustainable, especially given if there were a no deal? Is domestic inflation picking up? Because currently the inflation pressures are coming and stemming from and due to the weak pound. It's an island. Remember that, guys. An island. It's not like they have. So every time, no, correction. If anytime you see the pound coming off, you will see the FTSE 100 increasing often. Yeah. If the pound strengthens, you see the FTSE 100 weaken. And then we had a market environment where the rates were rising, and that actually takes some heat off of the Bank of England. So where does that leave us? The next rate hike is priced in by the market for August 2019, followed by another one towards the end of 2020. If any of the parts that are in focus come in better than expected, we would see pound strength. If the Bank of England hints at a February or May hike, in case of a Brexit deal done, you would also expect immediate pound strength. So that's the pound done and dusted. Here is the timetable that I was speaking of, thanks to ING. So what's on the docket? UK government announces the budget, that's today. Then we may or may not have, we have the Bank of England meeting for sure, and then we may or may not have a EU emergency meeting in November. It's highly likely that a deal is not going to be announced until the council meeting mid of December. Then we have Christmas break in Parliament, and then we have the withdrawal agreement ratified by the EU mid-late January. UK Parliament votes on withdrawal agreement, motion of deal agreed. Recall there was a law passed in June that the MPs in the UK have a right to have their say before Jan 21. Then March 21, we have the EU Council meeting. 29th of March, we have UK formally leaving the EU in case we get a deal. And then the transition period starts if the deal gets ratified, late May, European Parliament election. So take a screenshot. There you go. That's our timetable. Expect massive pound volatility if there's no council meeting agreement by December. Brexit deal agreement, that is. For the dollar, what's happening this week? Friday, obviously, we have non-farm, 191 versus 134 last time. Thursday, we have unemployment claims, leading economic indicators, 213 versus 215. Lower impact due to hurricanes, probably. That's what the numbers are telling us. If the PCE, that is one of the favorite Federal Reserve inflation gauges, dips much below their target of 2%, expect dollar weakness. Also of note for my traders, dollar yen, we have 4 yards option expiry. A yard is a billion at 111.60 on Wednesday. So that's after the Bank of Japan, but ahead of non-farm. So we could see a market manipulation down into that level and then off to the races in terms of a long. We could, all right? Recall, I'm bullish on the dollar until Wednesday. So I don't know if these 4 yards will actually be strong enough to get it below 112. Month-end rebalancing sees funds buying dollar. I'm repeating myself. Wednesday we have Soma day, very strong for the dollar 90% of the times, and dollar strength expected from Monday onwards. T-2, trade date -2, because the tax reform starts biting and corporates will repatriate the dollar. So there's some dollar strength in the market to be expected. That's the dollar done. Let's come over to the Bank of Japan. Tuesday, we have the Bank of Japan expected to leave their rates unchanged at -10 basis points and reiterating their positive economic outlook. Yes, they do have a very positive economy right now. Focus will be on potential policy normalization. My traders know this. For the new guys, I'll tell this one more time. Western central banks determine the short-term interest rate level, okay? That is how they support an economy, by making money cheap, or slow an economy down by making money expensive. Only in Japan does the central bank also determine the 10-year yield, i.e. around flat, meaning 0%. So money in Japan costs nothing. So far, the Bank of Japan used to come in if and when the 10-year yield went up to 0.1%, so 10 basis points. And recently, they've given the 10-year a little bit more room to breathe. That's why the market is keeping an eye on the 10-year, expects the Bank of Japan to let the 10-year yield increase a little bit beyond 10 basis points, sort of 20 basis points at the moment. Why? The issue was that this ultra easy monetary policy caused margin pressures for banks. Why? Well, a bank pays you nothing for your money, but charges you 3%, 3.5% for your mortgage, 30-year mortgage. So this difference in terms of what they pay out and what they make for their loans, what they pay out in terms of their sight deposits and money that you deposit with them, is how they make money. Now, if the yield curve is flat, so if you're even having to pay a prohibitive fee as a bank with the central bank for holding cash, your client's cash, which is the case in Switzerland, in Japan, in Sweden, everywhere where we have negative yield in Europe, it's very difficult for a bank to make money. So the banks were coming under fire, and that is the reason why the yield curve is being allowed to steepen a tiny little bit over in Japan. I hope that makes sense to you guys. That was the yen, done and dusted. Euro, Tuesday, preliminary flash GDP growth, 40 basis points versus last time 30. That means that the year-on-year is expected to slip to 1.9 versus 2.1% previously. So economic growth is cooling in Europe. German growth is weakening. We are the #1 export nation, but French growth is picking up a tiny little bit. Wednesday, we also have inflation in the form of consumer price inflation. We have the flash estimate, and on a year-to-year basis, it's expected to come in at unchanged 2.1%. But the core is expected to tick higher a little bit to 1%. That is what Draghi said last time. He says he's seeing core inflation picking up. Year-on-year is expected to tick up to 2.2 versus 2.1 due to energy prices rising. But what did oil do after the contract month? Who knows? What did oil do? My guys, Lars, Chris, are you sleeping? Oil tanked. Thanks, Chris. It tanked. So that has an impact on the Canadian dollar, and it also will have an impact on CPI, on inflation and PPI. So if core PPI, thanks, Chris, by the way, if core CPI year-on-year at 0.9% undershoots, i.e. comes in lower than expected, please expect euro weakness as the market will reprice their expectations for the next rate hike by the ECB, which is currently priced in for Q4 2019. So if inflation starts undershooting, if GDP growth comes off, expect euro weakness, okay? That's the euro done and dusted. Last but not least, Aussie dollar. On Wednesday, we again here, same thing, we have CPI numbers. I gave a seminar on Saturday in Zurich. Thanks again, it was awesome. Thanks for everyone who showed up there. It was really good. And Once again, someone told me, yeah, but the whole fundamental is difficult. Nothing is difficult. The fundamentals repeat every month. What is so difficult about getting it into your thick head once? What they're saying, what they mean, it's all about GDP growth, inflation expectation. And that repeats in every economy. That's why I start teaching my traders Forex, because it's by far the easiest market in the world to make consistent returns week by week, month by month, quarter by quarter, year by year. If you're unable to make money in Forex, you have no clue how the economy or the global market works. If you learn Forex and you learn the fundamentals, you can make money for the rest of your life. It's that simple. So September quarter inflation is seasonally strong over in Australia, and the core inflation is seen rising to 0.3 quarter on quarter. That means the year on year may tick down to 1.8 versus 1.9. Trimmed mean CPI, that's something they're looking at over there as well, 0.4 versus 0.5. If you don't know what that is, Google it. Google will tell you everything. So trimmed mean inflation coming off a little bit. Westpac, great bank for research down there in the Antipodens, notes that 2-quarter annualized pace of core inflation will likely ease back to 1.5 from 2. Whoa! And putting inflation momentum below the RBA's target band. Whoa! If numbers come in weaker, expect Aussie weakness. Regardless that we have a buy signal out of the COT report, recall, as long as US and China have their trade war, and as long as inflation doesn't pick up, there is no sustained strength in the Aussie dollar. Impossible. CFTC COT positioning volatility. Having said that, we're seeing in the Aussie dollar a long signal. Now, trade it at your own risk and trade it on a shorter term basis and not a longer term basis. And Kiwi, we also see a long signal, very technical. I would like the Kiwi played from the long side for this week. I have to say that. Volatility. Euro picked up. Pound picked up. Yen picked up. VIX picked up. Excellent. We're here to make some money. Intraday traders need volatility. Excellent, excellent, excellent for us. Swing trading means adjust your stops a little bit wider. Position trading, you shouldn't be that much affected by it. Your stops are naturally very far away. Option pricing this morning gave us a bullish indication for cable and for a gold long. Option pricing for this morning gave us a bearish indication for dollar-yen short and euro-pound short. In terms of the option flows, we saw a bullish indication on basically everything except the Canadian dollar. There we saw a bearish indication for this morning. So where does that leave us for this week? So I had a look and I like the following trade. I'm going to try to look for long signals in dollar versus Swiss. Why? Dollar, as I said, and I'm saying it for the third time now, tax deal repatriation, Soma Day and positive economic numbers on Friday. Thursday could see a little bit of weakness because all of these factors that speak for a strong dollar are done and dusted with by Wednesday, partially, so we could see a little bit of a reaction on Thursday. So I'd like to see this trade perform at the beginning of the week, not so much towards the end of the week. And then on the Swissy, I see nothing but negative economic numbers throughout the whole week. Could be obviously affected by risk sentiment. So the risks to the trade are dollar weakness. If, for example, the ISM comes in much lower than expected and or Swissy numbers were to come in much better than expected and or we have a risk sentiment that would favor flows into Swiss franc. But recall, ever since we started this US-China trade war, we have seen risk-off flows into the US dollar. That's how serious that is. So for my traders, they know this. Normally, risk-off means money goes into treasuries. Of course, that's still the case. May go into gold. Of course, that's the case. And may go into yen and Swiss franc. That's still the case. But if shit really hits the fan, excuse my French, money will always end up going into the dollar. So money having gone into the dollar also means that the market and the professionals are observing and judging this trade war as extremely severe. Okay, here is the trade on a 4-hour chart, quite simple. I'm trying to go long below the big figure, take profit at around 101.30, stop loss 0.897. I think it's a risk-reward ratio around 1.6 or 1.7. So still good to go. Guys, hope that helps. The other trade, if any one of you wants to have a look, the other trade that I liked was long New Zealand dollar versus Swiss franc with the profit target around target 1, 0.6575. If it keeps on running, 0.6630. Just wanted to let you know. Let me see here. VT, hello, good morning to you. Take your question real quick. Long New Zealand yen, your views? Thank you. Like it. I like it, mate. Especially if the risk sentiment turns, your trade has very good chance to perform. Chris, weak euro compensating some of the drop though. That's correct in terms of the oil trade. That's correct, Chris. Still for this week, I'm going to try to sell top edges in oil. Guys, let me check the watch. I think we're good to go. Wow, great attendance. Thank you very much for you all to come in, for having come in. Have a great week. Super opportunities this week again to make money. Last week we did 3 trades, 3 winners. Learn the business, make some money, have some good questions for us for next Monday. Thank you for coming in and have a profitable week. Jens, thanks for the opportunity to work with your traders. Cheers, guys. Bye-bye.
Thank you. This is or was Jay. Tomorrow is another